Well, I may be wearing the color green, but the mood in the market is exactly the opposite. We are in the throes of a global meltdown with the Dow tumbling over 1100 points overnight. The Nasdaq too saw a drop of 5% and the S&P 500, well, it's in the bear market territory and it has dropped or come off 20% of its record high levels. And the culprit, well, it's the red hot inflation in the US because it has started biting into corporate profits. Target reported its quarterly earnings and it was a wide miss when it comes to expectations. Dwindling consumer demand as well as high fuel costs have dented Target's earnings, and we saw the stock slump over 24% in yesterday's session. Another stock or another company that reported earnings in the previous session was Walmart, and even that was a miss on expectations, and the stock reacted to it by slumping 11% in Tuesday's session, and yesterday's session we saw losses to the tune of 7% on that stock. The Dow is poised to clock losses for an 8th straight week, and it has slumped in excess of 800 points for a 5th session this year. Stocks and other risky assets have seen a massive sell-off in the last few weeks, pressured by high inflation and the Fed's effort to tame high prices by hiking interest rates. Remember, the US Federal Reserve has already hiked interest rates by as much as 75 basis points since the month of March, and it has also said that it will be increasing interest rates until and unless inflation comes back within its targeted range of 2% or thereabouts. In tandem with what the Fed has done, we even saw the RBI raising interest rates by 40 basis points in an out-of-turn move. In fact, the central bank has also said that it will be raising interest rates in its future meetings as well. So the Indian markets as well are witnessing quite a steep sell-off, with the Sensex down about 1200 points, the Nifty somewhere around the 15,800 mark. All the sectors led by technology and metals are deep in the red, and almost all these stocks on the index are trading in the red. Interesting to note that ITC is holding firm despite the weak sentiment in the market. The shares are up by somewhere around 3% after it reported a steady set of numbers despite inflation headwinds. In fact, Jefferies believes that the company will outdo its peers, and the margin visibility also remains on the positive side, and because of its high dividend yield, it will do well going forward. The mayhem doesn't seem to stop anytime soon. We have seen the Lal Street shave off somewhere around 7 lakh crore from its market cap in today's session itself, and the mood across Asia as well as European markets can be better or best described as grim, especially after Chinese tech giant Tencent reported a weak set of numbers. It can be safely said that the bounce back that we had seen earlier in the week was indeed a dead cat bounce, as there is no respite from the sell-off that we are witnessing in the global markets. Whether or not there will be a respite tomorrow or not, we don't know. It's just that the hunt for the bottom continues when it comes to the stock markets.